On this week's episode of The Home Show, I'm going to be talking about 5 ways and reasons you should use the FHA loan product to help you make your dream of buying a home a reality. Let's get into it. So the number one reason FHA should be considered when looking to make your dream of home ownership a reality is the program allows for a higher debt to income ratio. So that is a huge reason because of the affordability piece, higher interest rates, just higher cost of living across the board. So you want to do all that you can do to lessen the amount of cash flow outflow that you have on a monthly basis in every area possible. So again, to get into a home, having higher debt to income ratios to qualify with is a beneficial feature of the program. The second reason FHA is a loan product that you need to consider to make your dream of homeownership a reality is because of the low down payment. That down payment would be 3.5%. Another reason I like the FHA loan product and the down payment of the 3.5% is because there are several ways one could be gifted the down payment when dealing with FHA that you don't have that same flexibility when it comes to conventional loans. Okay, so low down payment, 3.5% for FHA will allow you to again mitigate the cash that's needed to make your dream of home ownership a reality. Moreover, there's several ways that you could get help with that down payment assistance that are not reflected in other programs. The third reason you should consider FHA loans is because of the lower credit score offering. Long and short, if you qualify, you can go down to as low as a 580, what we call in the business middle score. That's the lowest middle score of the applicants on the application. But 580 can be done. And let's face it, there's a lot of folks that have had life happen to them, and not everyone has high credit scores. To that end, you do need to realize that the lower the scores, you're going to see that reflected in the risk or the rate. But once again, you do have that flexibility with the FHA loan product that other loan products do not afford or offer to potential buyers. So go as low as 580, still put down 3.5%. The fourth reason to use the FHA loan to help make your dream of home ownership a reality is because of the higher seller concessions that are available with FHA loans. You could go as high as 6% at the lower down payment at the 3.5%. We want to do everything that we can, not just with the monthly, but the cash outflow to get into a home, because really that's still the number one barrier. The fifth reason that FHA should be considered by you when looking to make your dreams of home ownership a reality is because of the mortgage insurance premium. You may have heard it called private mortgage insurance. Same concept, different name, but the annual portion that one would have to pay, in this case, mortgage insurance premiums, are not based on your credit scores. They're not credit score driven. It's based on your LTV, loan to value. So at the lower down payments, meaning you'll have a higher loan to value, 96.5% in this case with FHA, the mortgage insurance premium that allows you, that insurance that allows you to put down a lower amount is not based on your credit score like on a conventional offering. And therefore that helps lower the cost of that monthly payment and affordability as well. Moreover, this year, the factor for 90% of people that use FHA loans are going to put the 3.5% down and have the higher loan to value, but it went from a 0.85% of the base loan amount to 0.55%. So that just translates into a lower monthly payment, more affordable, okay? And those are all great things. So just to recap, high debt to income ratio, FHA allows for that. Low down payment, low credit scores, down to 580 at a 3.5% down payment. We'll call it a 550 middle score if everything lines up. Got to put 10% down there, but FHA allows for lower credit scores, higher seller concessions, number 4, and then number 5, the insurance, the mortgage insurance premium is not based on your credit. It's not credit driven, but it's based on the loan to value or your down payment. So at the 3.5% down payment or the 96.5% loan to value, that mortgage insurance premium is not going to be driven by your credit score. FHA is something that you most definitely need to consider. And to watch other videos like this, watch this playlist here. And if you want to know when we come on or produce other videos like this for your education, make sure to hit the notification bell. Indeed,